Hello again. This is a response to Alex's question about how long it takes me to visualize or analyze the charts for a possible trade. Um, right. Well, I have sort of gone over this a number of times in previous videos, so it sort of should be fairly self-explanatory. But there are a couple of points I would like to make again, as it were, and that's that news is very important. I trade around the news, and I have to look at the previous day's charts to see what my plan of action would be for the following day. And a good example on Friday was that there was news at 8 a.m., which is quite an unusual time. And I'm talking about red news, the news that affects the price and will cause it to either go sideways prior to it, because the big boys are putting their orders and planning their own method of attack, as it were. And then there was also news at 9:30 on that day. So it was Swiss news at 8 a.m. and GDP British pound news at 9:30. So that meant I had to decide whether to take a trade prior to the normal 7 a.m. Frankfurt Open, as it were, or and take a chance that I wasn't going to get caught up in the sideways activity because news was such a close occurrence, as it were, at 8 a.m. I'm quite happy to take my trade at that time of day when I've only got to worry about news at 9:30, because I think you could almost rely on the dealers and the big boys getting itchy fingers. That's the way I like to think of it, and think, well, they've got an hour or they've got 2 or 3 hours to kill before 9:30 news. They will move the price. Whereas if they've only got an hour to kill before the 8 a.m. news, then sorry, there's nothing going on the charts to show you. Then if they've got just that hour to wait, they go off and have a bacon sandwich and coffee. I like to visualise those sort of things in when I'm trading, because at the end of the day, that's really happening all over the world. And then the other side of the coin is, I get in at, or I set my alarm at 5:30 or 5:15 rather, and want to be out of my trade. And that takes 15-20 minutes to look at a chart, decide what trade, what direction I want to go, and then trade accordingly. So there's plenty of ways around it, Alex. You can either decide I'm not going to trade news days, so you just get in. You've got a steady old setup first thing in the morning, and that might limit you to a couple of trades a week or something like that. There are quite often days without news. 8 o'clock, 9:30 news. Very rarely 8 o'clock news. Or you decide you're gonna, do this like I do full time, and just plan your trades and trade your plan, as it were. So Friday's an example. I did stay out, and it took me 6 hours to get my trade eventually. You could see the trade there. So didn't even bother getting up at 6 a.m. Just didn't want to disturb the wife. It was her day off, and I knew I didn't want to be trading. There's the 8 a.m. Swissy reaction there, and then we had 9:30 news again. There's a 9:30. Look at this. It's just a mess, and these are great big candles, 25 pip candles, and I just don't want to be trading. Just breakouts and hearsay, as it were. I want to be trading my method. So I waited for a 30-minute reversal off of this 129.50 level, and then just waited for a 5-minute break of that level there, the 129.25, and entered the trade accordingly. So that was a 5 or 6 hour wait for the trade to come to me. But you could avoid that, of course, and then just stick to 15 to 30 minutes worth of, well, no, it's not even that, it's probably 10 minutes analysis, which was what your question was. Go through, in this instance this morning I only went through 3 charts: dollar index, euro dollar, and pound dollar. and ended up shorting pound dollar this morning. But so it is 15. You answered your own question really, Alex. It's 15 to 20 minutes analysis in the morning, and then just waiting for the price to do exactly what you want it to do. So in this instance, I had to wait for a few hours, or 4 or 5 hours, and then I got my alert, which is this on the 5 minute chart. This is what the 30-minute alert is showing you. This trend: low, high, high, low rather, lower, high, broke through, lower, low, broke through the level, enter the trade. And you could stick a couple of lines on here if you wanted to, just to tell you that the chart is definitely broken through a level: high, low, lower, high, lower, low. These rising lower, higher lows making higher highs. That's why I've drawn that line there. In this morning's instance, we've got a massive 4 hour uptrend with a trend to the downside there, which was why I wanted to take this short. I knew it was only a retracement, but and you can see now it's clearly starting to push up. A little bit of dollar weakness in the market, and up she goes. But I'm not interested in trading that. I've got my trade today. I might come back after lunch today if we get an alert to the upside, and then have a look at well, we've got an H1 alert, but you can clearly see in this instance this is only a pullback to this potentially massive H1 swing trend to the downside. So this could easily just be a spike here and then continue to the downside, which neither way would surprise me. But I don't want to be trading long on a wing and a prayer. We've got that resistance there to get through, we've got that resistance there to get through. We're just breaking through this resistance. In this instance, sorry Alex, I've gone off subject, but I could see this scenario taking place, which would be a break of that resistance there, resistance because it made a lower low, broken this low to make this lower low, come back to test this resistance as support, and then potentially pull up to the long side. So you can see, to answer your question, Alex, 15 minutes assessment prior to the London Open, Frankfurt Open, or a lot more long-term assessment and judgment if you're trading after the London Open and you're trading around all sorts of news. It just complicates matters, which is why I like to trade first thing in the morning. Hope that answers your question all right, Alex. Oh, just one more thing while we're looking at this. This would be an H4 alert to the long side at that stage. You'd have a blue arrow somewhere around here when this H4 candle closes, and then potentially, as I say, some sort of pullback. The reason I drew this like this is you need to be above resistance, true resistance, which is what I talked about here, in order to treat it as support. And basically there's no more buyers left over here, which is supply, and there's loads of buyers over here. The reason I say that is because if there's more demand, then it stands to reason we've lost the selling urge, as it were, at this point, and the price will go up. So that's all that's happening: supply and demand, support and resistance, call it what you like. This is going to be a big H4 candle now when it closes at I think 2 o'clock in the afternoon, and although it could just be a spike, massive spike on a sort of a reverse hammer, if you like, and price will potentially go down. But we trade what happens on the charts. Okay, thanks for watching everyone, and Alex, and I hope that's answered your question, Alex.